Hey, what is up, everyone? This is Due Diligence here. So this is gonna be an aftermarket sort of report on how did I do or how did we do on BB today since I sort of YOLO'd it. So if you look at Wall Street Bet right now, we can see BB have the top fourth interest, and I'm gonna cover CLNE in the next video and maybe cover AMC a little bit. It's really a shame, really, because if BP hits either $13 gamma squeeze, gamma strike, key gamma strike, or it hits a $14, the hedge is gonna lose a lot, especially with the market makers who has to sort of do a gamma hedge, so then they have to force to buy back more shares. Right now, I think what happens is I think the hedges and all the players in the market, institutional players, are getting used to retail flow. And when the retail flow are being tracked, predicted, hedged against heavily in the US market, that means the EU market is actually gonna have an advantage of that. I think in the morning when I checked when the EU closes, mm, their price is actually significantly higher than our price in terms of fair value or in terms of like currency adjusted value. But hey, we're trading the US, so we can't really do anything about it. And today you see we actually have a loss here. And if I open up the Thinkorswim, oh, before I open up Thinkorswim, let's just mention something. From my algorithm, what I picked up is when we have a more sentiment update, for example, on a sentiment update on yesterday, usually a sentiment update from a significant upgrade of sentiment will increase the share price by a lot. But today, as we can see, it's around a 3-point increase, but it doesn't really change the share price that much. However, earlier in the market, if we look at the problem with BB is earlier in the market is what we see is wait a second. What we see is we have a up sorta, and everything just drops because a lot of shares were bought to short today actually, and we can't really go over the 13.8 and the $14 line. And as you see in the middle of the night, like literally, like 3 o'clock if you're on the East Coast, midnight for West Coasters, we hit the 14.15 for the 14.15 line, which is actually the previous support line. We have a major resistance here, and as you can see, we still cannot really exceed this line yet. Because I suspect a lot of people have bought it in here, which is today's lowest line. Which this is a 12.62 is actually a very important resistant line. We're now trapped inside of this. Okay, we're trapped between 12.62 to $14. If we break the 12.62 support line underneath us, this stock's gonna be like Clove. It's a dumper. We don't want to touch it anymore. If it's over $14, hey, I guess we're going to the bars again, and we're gonna have a major win. But I guess this weekend there's no bars for me, guys, and let's see how the aftermarket trades. I think the aftermarket is probably going to trade up to 13 over the weekend, and a lot of actually call option volume coming in at the 13 strike line for next week. I think instead of like really YOLOing it, I might lighten up my position a little bit around Tuesday. So I don't really want to, because trading is really a survival game for me right now. I'm young, my predictions are usually right. But for the most part, I'm playing with the money in terms of like a time frame. And as we build up this community, more and more people sub, and as we can spread the words, I think we're going to do better and better. But for now, I need to preserve my profit. Because by just making this YOLOing move and betting on retail players, it's really hard to really betting on retail players winning. Because A, you significantly have less leverage, or us as a collective have less leverage. We have less ways of fucking the market over in our favor, right? In favor of us. And for us, we're using our hard-earned cash right now, right? But for hedge funds, they got their money from somewhere else. And then because they have their 2 and 20, they don't really need to worry about. They don't have as much of the psychological pressure as we do, right? And then a lot of people are talking about the dark pooling, which we might or might not cover over the weekend. But right now I'm just okay because I lost a bunch of money in call options this week because my time frame, my price prediction are on point, but my time interval calculation are too bullish or too aggressive, so I need to readjust. So I include some losses, but I'm still sort of in the green right now. Still, next week, let's see how everything goes. Perhaps we're gonna make some big profit in this YOLO move or in other stocks. I've been doing research on other stocks right now because I think I'm gonna a little bit deviate a little bit from the memes. Because the meme stocks, I think the hedgies, all of the hedgies and all the big boys are adapting. They're adapting to how we play the market as retail players. And AMC is still holding strong, right? But the problem with AMC is it's too high of a capital risk. Because if you look at AMC's graph, right? Sorry, I'm gonna go into AMC a little bit. For those of you who are just here for BB, you can just click off or whatever if you don't want to hear me ramble or talk about technical classes on AMC. AMC is very targeted, okay? For example, you can see this major support line here, which is $58. Today we dropped it under 57 actually. I bought a little bit over here. So I'm actually in the green for AMC in total. And you can see the upper resistance line is around like 64, 65-ish. And this is not really a problem. If we ended up hitting the $60 gamma strike, which is right above here, then we can see the stock will probably rest about 65 by the end of today. Because all the options come in and everything, and everybody have to hedge. The market maker has to hedge, and maybe, because this is a June 18th play, so that means some of the firms are required for some of the hedge funds to actually cover proportion of a percentage of the position. But when we didn't hit 60, it's not gonna happen, and I don't think it's gonna happen next week. Maybe the stock's gonna trade a little bit higher than 60 or next week, but there's not gonna be like any significant jump like previously, like 50% or 100% jump. I mean, at the end of the market close, we have a lot of volume spike, but it's already too late. After market trading, doesn't really matter in this ball game anymore, because all the hedgies and all the market players can just sit down and just zip some coffee over the weekend on Sunday night, just squash you, right? We can trade up. We can trade up like very, very high, even trade up to $62 over the weekend, but they still can get a bunch of shares to short or do some interesting hedgy stuff that we might or might not cover in the later videos that they can do that are not in our disposal that we can do about. But anyways, this is just a aftermarket analysis or report on all of these plays. I think I'm being a little bit compulsive, less rational, and sort of like got bought into the Wall Street bet movement, which in reality is not really a good thing, because those sneaky attacks only works once or twice, because institutional investors have been doing this stuff before we were even born, right? Because I'm in my 20s, and some of you are in your 30s, some of you in your 40s. Maybe you're just playing around with your stimulus bill, perhaps want to make some money. But a lot of those hedgy boys, they've been trained for like more than 15 years, right? You have like the old people retiring, and you have the old people training the new people, and old people passing down little tricks to the old people, and they adapt. Old people teaching young people, and young people adapt in this day and age. And I suspect that a lot of shareholders of AMC is actually also playing alongside with all these big players in the market. So there are a lot of forces against us right now. I'm not trying to be a party pooper or anything, but I'm just saying, rationally speaking, if we didn't hit $60 gamma strike this week, how do we accept? How do we have the anticipation, expectation of hitting a gamma strike next week? Maybe the gamma strike next week will be lower, or maybe it will be higher. Who knows, right? But we have to be cautious here, because if we go and look at AMC, we don't really have that much of a gap anymore. You see, we've sort of topped here. We're topped here. You see, we topped here. We almost topped at 60 right now. And in order to hit the 72 permanently, the previous high permanently, we need to have a huge volume spike over here, which only happened on this day, right? It's hard because we don't have that much fresh capitals anymore. We're always talking about buy and hold, but in reality, just buy and hold is not doing it. You need newly inflow of capital to make it happen, to go even higher. And then we sort of need to have a coordinated attack on, or a coordinated exit together, so then the hedge funds are left with all of the hot potatoes at the end, not us, right? So we got to think about it. We have to think about it strategically. And if you look at the volume differences, from here to here, I mean, even from here to here, right? There's a significant volume decrease, but in here we have a sort of a semi big upside, and we have some follow up volume, but the volume is not significant enough. It cannot offset the hedging effect of other players. So then you will see the price goes down, and then here we're like, oh my god, there's a major resistance line we were hitting. And then people bought it back, and we go trending up. But we see a huge resistance line at 60, and if Monday we cannot stabilize at 60, the stock might be trending down. Same thing with BB, right? If we go and come and look at BB, BB is a very interesting case because if you look at this, right, we're not nearly at the price of the AMC yet. Like literally, one share of BB probably will cost you 1/4 of a share of AMC. That's why I always say BB is much. How to say this? It's less risky in terms of per share, but if you're going YOLO style, it's still risky. Like we have to define our maximum risk here, right? So right now, if it trended lower than 1262, we probably will say it filled the gap over here, right? If it filled the gap over here, what we will do is we're probably gonna make a quick profit in the middle of it, and then probably exit it when it's trying to reach the 62. The previous support line becomes a resistance line, no? And we dump it, and we make a quick profit, and I'll be over BB forever, at least for the short-term period of time, right? But most likely we're going to be trapped in between 14 and 13. Then your buying point will be very critical here. But anyways, like I said, we're not financial advisors, so we don't give financial advices. And everything we talk about in these channels are for shits and giggles and for entertainment purposes only. Alright, see you guys on the upside, boys and girls.